Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Thursday, September 21st, 2023. It is 9:58 Eastern Times. I'm starting the video, so we're about half hour into the trading day, and I wanted to get one out early to you. All right, so most importantly, we have the additional confirmation. Remember, yesterday was Fed Day. Take it with a grain of salt. However, we did have some pretty solid red candles that I pointed out, closed right on that 365 support. What happened since then, the futures went steadily down overnight and we gapped down below support. So that is an additional check mark, which in my opinion substantially increases the odds that my primary and preferred scenario will continue to play out, and that is a move down. Again, these are just initial swing targets. Kind of went over that yesterday, looking at least, T4 is kind of zeroing in on that. That's probably where we'll get the first good tradable bounce. And as I said yesterday, I don't know if you caught the video, and I'm going to speak to that in a second. Seen virtually zero comments lately, and that tells me we're at where I think we were in the market. I'll get to that one second. So what I think is there's a good chance that the reactions will be little to none. Another thing that kind of is fitting in well, I pointed out to you this morning, I got a post out, we had on the 5-minute charts, that's right here, these nice clean textbook bullish falling wedge patterns, and we broke out, and we couldn't even carry up to those. These targets are very minimal. It was talking about a 0.7 to about a maximum of 1.1. So we call it about a 1% bounce at most, or give or take in that range, 0.7 to 1.1 on the NQs. That's the NASDAQ 100 futures, and then ES. The bounce range was same thing, about 0.6 to 1.1. Same. Oh no, somehow that was NQ again. Here's ES. ES is over here. Sorry, I moved in my head. I'm on a split screen so I could watch them both. And so they both failed. We had a breakout there. Now we're back to the wedge. Sometimes I have seen there's still a chance if the markets are going to giddy up and do it, they're probably going to do it right about now. But so you watch for that. Maybe you get a little false break and then the wedge goes on to break out. But so far it didn't. It got sold into. So, there's a lot in my head, and I want to get this out to you for those of you that are listening to this video and haven't given up on the markets. This is a change of character. Usually these bullish falling wedges, even down on the 5-minute charts, especially in a bull trend, they're going to carry. In a bull trend, they, often the catalyst to new highs, next highs up. But even in a bearish trend, as we've seen lately, they're good for at least one or two up to 3% counter trend trades, and so far this one got sold into pretty hard. Now since then, and I posted it on the site for you if you follow up, that is for anybody that is trading. Oh, here we go. Oh no, that's yesterday. Yeah, that's yesterday's. Here it is. 5-minute wedge breakouts or bullish falling wedge. And so in the comment section, and this is what I'm going to go over now, and that's why I'm doing the video. I said not sure if NQ is going to have enough juice to make it to those targets. That was when the breakout hadn't yet failed. Because what happened right after I got this out to you, I got that post out to you right before the open. When the opening bell hit in the first 5 minutes, I had alerts going off like popcorn. Now, if you are, if you have been following me, I've talked about this for weeks and even months now. I've been going through videos of my favorite sectors, those some of those being home builders, semiconductors, first semiconductors, then it was home builders, then or right before that, it was the restaurant and leisure stocks, airlines, restaurants, hotels, cruises, things like that, casinos, and all these other. And then you started picking on the financials. And as I went through the videos, I told you I'd set alerts, and I said, from my experience, what happens when the time is there to really start to get aggressively short. I said there'll be one day it'll be quiet, and then one day I'll have alerts going off like popcorn. So so far this morning, at least the first 5 minutes of trading, sounded like the klaxons going off on Hiroshima, just alarms going off everywhere, price alerts, and so I'm going to get to those right now. Now here's what I said in this post right here, or this comment. Very important. So I have all those alerts going off like I just told you. But Most importantly, I've seen this before. There are times, especially after a Fed meeting, we're still in the wake of the FOMC meeting. If the bulls, if they're going to pull it off, they need to pull a stick save soon, or the odds of a much larger drop will increase substantially today. What I mean by that, okay, right now, QQQ is down 1.4% as I talk. If we close down 1.4% or lower, I'm going to show you the levels, that's going to help to solidify the sell signals. There is no guarantee. The odds approach but never hit 100% of anything. Nobody can ever tell you with 100% certainty this stock is going here, or the market's going up or going down. And if you're ever listening to somebody that does, and especially if they're selling a service, run, don't walk, but run from them. Nobody knows what things are going to do. So all I can tell you is the odds go up, and the odds can change. Just like I use that analogy, betting the ponies, right up to before the window closes, and they can change. I'm not a big bettor, but I went to Kentucky Derby once and watched it, and was surprised how much on some of the horses they can change, and as the bets come in. It's just the casino or the house trying to make sure they don't get wiped out on so they're making sure they make money on all the bets. All right, anyways, this is the NASDAQ 100 right here on the daily chart, QQQ. So we gap down below that 365, and we're well below it. We're in what I call no man's land, technical no man's land. It's like playing tennis in the middle of the court. So you don't do that. You play in the back of the court, or you charge a net. But, if you play in the middle, they're just going to lob it over your head or do a drop lob shot at the net, right over the net, and you're not going to be able to cover it. So this is the same kind of thing I use, but when you're smack between resistance and support, right? So one scenario, if those 5-minute wedges do play out, we get a little kickback rally to here, and that would be an objective short entry. Okay, call me a glutton for punishment, but I paused the video and I just grabbed some more, went back into NQ long, and I took it pre-breakout this morning, anticipating a breakout of those wedges, and got it out to you. But I think I think this is a whipsaw, and I think we are gonna probably come up here. So here's what I'm looking at, guys. You can probably get a little rally today, kickback, and that would be an objective time. And again, don't follow me. I'm in and out. I threw this hand away when I saw that we were reversing, and failed to break out first, then NQ. So I was only trading NQ and got back out short. And I just went long right now here. So I think we'll probably come up. And if I may pause the video again and get back short. That's just what I do. I trade sometimes dozens, many times, up to a dozen or more trades a day in NQ, in out, when the markets are moving. And what I'm going to do too, I'm going to get videos out to you more frequently now, because we have a lot going on. So anyway, this is just short-term stuff. This is not for the realm of the swinger trend trader. I'm going to speak to that in a second. That's ES. There's NQ right there. And so we're back to the bottom of those wedges, still have strong divergence, and it just kind of smells that way post-Fed that we're probably going to come up here and back test that level and then go on to hit T1. So the sell signals are intact. Little counter trend rally would just allow me to gain another 1% or so, turn around short, and then so overall round trip, if you gain one going up, you sidestepped a 1% loss or get back in your shorts, turned it into 1% profit. That's 2% plus, and then turn around and short there. That's why I like to active trade and make these little micro calls. And sometimes they play out, sometimes they don't. But the levels to watch for a swing trader are still 365. I think any kickback 2 would be an objective short entry. You have a confluence of key moving averages. I think you can see them all here. 28 EMA, the 50 EMA, and the 50 simple, all above right there. And then you have the trend line. So as per yesterday's video, this is where, a solid recovery back above the trend line. And if it happens, it's going to have to take a little bit to get up there. And it's probably going to coincide with a break of both the recovery back above the trend line in here. So that's my no-go, and that's where I think the odds that we're going to punch to that marginal new high still exist. But as of today, in real time, those odds that this is going to happen, my alternative scenario dropped even further. So let me be very clear and unambiguous on that. This is where we are today. Increase the odds even further. What did I put them at yesterday? Maybe down to 30, 35%. And they probably dropped down now to 15, 20% that we're going to do that. But if we go up here and boom, recover 365 with conviction and start running at a back test of the trend line, that's gonna turn those odds back and start to increase them again of that marginal new high scenario. All right, what else I want to show you? Let's see, SPY. We'll look at SPY. Right there, SPY broke down, everything, all these breakdown candles from recently. And remember, I had on the other board here, I had this trend line right here yesterday I covered. So all these breakdowns, there was the pre-Fed and post-Fed confirmation of the break of the trend line there, and this is additional confirmation right now. So you see what I'm looking at. Another way to put this very simply, guys, is I'm at this point, and it has been, but it's even more so now, I view it as a short the rips and cover the dips mode. It's the inverse of bulls. What they do, they buy the dip, right, buy dips, and ideally you want to buy dips, pullbacks to support, and then sell the rips, the rallies. So we're in the reverse mode now, unless we recover there. So I always say the charts are dynamic, and so is my analysis. So if we can reverse, and this is where I start to become concerned, above the trend line, and then 448 and a quarter on SPY, and the levels I just gave you on QQQ. So let's see if I can get a little bounce back up to resistance. Not going to hold out for the whole thing. We'll probably be back, and I'll use those levels I gave you on the futures NQ. That's it. Let me get to now the alerts that went off. So let's not make this a super long video. I gave you a pretty long one yesterday. So I'm going to just pull up my alert page. This is just today. I can go over the last few days, but all these fired off today. And again, we're close. This is PCZ. That's the PIMCO California Municipal Income Fund. One I've been watching in recent videos. I highlighted that there's something going on. This is an area, really a state I've been watching for a long time. I think one of the potential big shoes to drop coming up is the pension fund crisis. I believe in the next year or so that'll start to make headlines. Underfunded pension funds have been underfunded for forever. For a long time, for years now, and the whole breaking of the 80-20 rule, stocks and bonds, diversified bonds go up when stocks go down thing, that crushed them back in 2022 when both stocks and bonds fell together. Showed the whole asset allocation thing didn't work out well, and it actually did the opposite, backfired. So what I was getting at, and I highlighted the other day, is the National Municipal Bond Fund. This is kind of my go-to MUB. It's iShares S&P National Municipal Bond Fund. So they have wide diversified holdings of bonds from around the country, and they're still well off their late October, early November lows. And yet PCC. So that just shows what I'm looking at is one thing to see if bond funds should be going down because rates have been going up, right? That's a given. But when California bonds are falling a lot more relative to the rest of the states on average, that shows there's a problem in California. Okay. And again, I've cited fundamental reasons. I'm sure you read up on it. We all know, well, whatever. I'll just let you guys have your own thoughts and opinion on California. So that's something to watch. And again, it's something to watch because it's not Hawaii, or Alaska, big as the state is, as far as geography, Alaska is, or let's say Hawaii, it's not going to move the needle if they have, some problems there on the state level. But California, from what I understand, has always been about, for years, about the world's seventh largest economy, larger than most other countries out there. So anyway, so one to watch. And again, I fired an alert. That's why I'm doing this. It fired off an alert. It's not really melting down through there, but what it's doing right now, it's testing those lows. And so this is where the stock market was back in October, and the bond market's down here. The other one I got today was I had an alert on TLT, which would be inverse. So long term, this is 30-year bond fund right here. And so there's where, again, not by mere coincidence, the stock market bottomed right when interest rates peaked. Remember, bond prices, that's what, when you look at TLT, it holds the bond. So it's showing the price of the 10 or the 30-year bond, really. It's 20 plus, but they're targeting the 30. And so that's what took, in large part, the stock market down in 2022 was rising interest rates. Rates peaked right there exactly when the stock market bottomed, and that's where the stock market rally started. And everyone declared the war on inflation won, and but that was premature. And you can see here we are. So the bottom line is that triggered today. I had an alert. So that's basically, we just made a new 52-week and multi-year low. This is in TLT, in the long bond. So you got to go all the way back. You know, if you look at this, or the better way to do it, you can look at TYX, that's 30-year yield. So here we are, we just broke out to new multi-year highs. The last time 30-year bonds were this high was back here in 2011. And if you take that line back all the way, you can see that's where the financial crisis started, right here in October of 2007, when that bear market started in stocks. That's where we're at. So this is what I've been talking about, and it's coming to fruition. That all eyes thought the battle on inflation was won back here, and the stock market did. And I said the stock market's been playing a dangerous game of chicken with interest rates and the Fed, completely pricing in, 110% pricing in the fact that it, was recently within spitting distance of new highs, new all-time highs, and at least over the previous highs right here. See, this didn't jive, and still doesn't jive. If you look at where, again, stocks were because of rising interest rates back here, you would think that's at least where the stock market should be, right? So one of the two is going to happen. Look, this isn't a big breakout in bonds. When I look at the 10-year yield, it's breaking out, but it's not running away. TLT is down 2%. It's a pretty big hit. And then you look at IEF, the 10-year, that also, I didn't have an alert set, but it would have triggered. You can see now, this is where the alert would have been, right below the previous. There's that October low right there. And so we broke out, and the 10-year yield has broken out. It could be a whipsaw, and I'm going to watch that carefully. And then if we do, if the breakout fails, remember, we're just above trendline support. So these are things that I'm watching. And again, we could break that. I've talked a lot about what that's going to mean, whether it's bullish or bearish for equities. And it all depends. There's a big kind of two alternative scenarios with rates going down. And let me get to everything else here. We'll wrap this up. SMH is that one off today. It's just one of the semiconductor ETFs out there. So that one broke down as well. So again, the market has the potential. The bulls have the potential for a stick save. It'd be pretty powerful. Like I said, I'm just gaming. That's very short-term stuff. Ignore my short-term. Sometimes I feel I shouldn't even post that stuff. But I know that some of you ask for it and like it. And some of you are active traders. So we'll see if we get that little bump on the near-term on the 5-minute charts today. But and if we do, here's where I'm going with that. What was I calling for? About a 1% pop in QQQ, just to those shallow targets. That would take us off the lows, or about right here. Yeah, that's going to take us right back. See, that's going to take us back for a back test, and I would again love to see that just to juice up, juice up some profits today, and then go down. But much more than that. That's what we have to watch for. You want to watch things like SOXX, semis. If it gets back above, that's the other one that fired off a sell signal. I think I covered in yesterday's video. We closed a hair below that 472.48. That was my red line. So this was our first sell signal. We had a breakdown there, then a back test. Those were objective short entries. Then a back test of this resistance at about 509.50. These were all highlighted as objective short entries. So this has been one long trade that's now triggered the next objective entry. But if we pop above there, much above that level, then this whole thing is a failed breakout. So I'm not expecting it. It's not my preferred scenario, but it's one I'm completely open to, especially being that we're right off Fed day. Okay, if we were a week past Fed day, I'd have a very high degree of confidence this breakdown will stick. I'm still a little skeptical, and like I said, we'll see. Came a little bounce here and probably be a back test and objective shorting entry. But if we go up much more, especially over here, yeah, that's not going to be good. That might allow the semis to go all the way for a back test. And, if you're short the semis, you probably don't want to ride out a back test. That's going to be about an 8% or so lift from where we're at right now. Okay, moving on. What else went off today? I covered semis, PZC. Oh, yeah, I had the credit card companies, MasterCard and Visa. These are not just trade ideas. They are that. I gave you that before. But it's, I think, they're in my things to watch list. That means things that are important to the economy and or the stock market. So fewer things, and you can do this, and I said it before, take Visa or MasterCard, plot them on your chart against the S&P 500, go back as long as you want. You're going to see they move in near lockstep, and that only makes sense. If the economy is growing, then Visa and MasterCard are growing because more people are swiping plastic and they're getting their cut. And likewise, when things contract and the consumer tucks in, they get smaller profits. And so it's easy, and so it's also an indicator. The chart clearly indicated it was going to break down. It broke down today, but we're right there. We're right below, and it is a breakdown, but you were right about on the line. So again, these are things I'm watching. If we close the day at today's lows or below, that's going to solidify and increase the odds this breakdown is going to stick. You had Visa. I also had an alert on today. There it is, also breaking down. Again, these are well-defined trend lines, guys. So, the further we can get down below today's lows, the better the odds, especially on a solid daily close, that these breakdowns are going to stick and not prove to be whipsaws. I also had TIPT. This one was a short way back here on a breakdown, hit our first and second targets, bounced off T2, and then I gave it to you the other day. I did an update, said it's also a new setup, and that one broke down, triggered. So like I said, this all happened this morning. Bing, 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 bing. I had alerts going off like crazy, and that is typically what I've seen in the past when we have some pretty important sell signals in the market. That and again, so barring a quick reversal or a big reversal, I should say today, then the odds just went up that we're going quite a bit lower in the coming days to weeks. That was not an alert on the video. Let me go back to my list. It's on another page here. What else did I have? I guess that's it for today. In the last, let's see if I add in yesterday. What did I have? Oh yeah, yesterday I already covered this in yesterday's video. I had SPGI trigger yesterday and a price alert, and I'd have to go back beyond that. I'd have to sort for the last 7 days. I have an option to look all my alerts that went off today, last 2 days, 7 days, or 30 days. So, all right, you get the picture. More and more breaking down. Oh, okay, and then the theme is, financials. There's XLF. It broke down below that minor uptrend line. It's still in the middle of the big triangle pattern, meaning this downtrend line right here and this uptrend line right here. But it did trigger a sell signal there. And home builders have been one of my favorite sectors. That's almost effectively hit T3. Got close enough today to consider that hit if you look down there. So that's that one continues to pan out. We've shorted this one. There was a first sell signal, second sell signal, and an objective short entry add-on on the back test. So that one's playing out as expected. And it's been a while since I've updated the restaurant stocks or even looked at them myself. Eats, and then I had PGJ, which is the PEJ, leisure and entertainment. That was the broad-based sector ETF for the leisure sector, and I can't remember where we started picking on this one. Somewhere shortly after that divergent high, right off the highs, if I recall right. I remember just saying it just, from my instincts, it reached that crescendo of bullish cries, how strong the consumer is and resilient the service sector. Everyone's eating out and flying, booking vacations and flying on planes and renting Airbnbs and hotels, and that was it. That was the end of it. And you can see that sector's down already about 10%, with a lot more to go, in my opinion. Let me wrap it up here. Just watching that NQ 5-minute chart, just seeing if we can get just that last little bit of dip buyers. The way when the market rolls over, and that's what I wanted to talk about, and then I'll wrap up, guys. Last couple, I go on the site. I try to catch up when I can on the comments and answer any questions. And it's a ghost town in there. I even had to look at the last video get published. And it makes sense. This is where, I've done this again long enough to know that back here is where, or really more about right here. Remember, we've gone sideways now for months. It's been over 3 months that this market has gone. It went up a little and down a little, and it's right about where it was over almost 3.5 months ago. And about here, you started to get the angry, snippety comments. This is where, the last swing or trend short entry that's still in play was done on QQQ on the break of this trend line. No, actually, I take that back. I remember there was a 60-minute wedge right here on the 60-minute chart, a smaller uptrend line. So that was it right there. Then we went on to break this trend line, then this one, we had pushback. And this is where it was, some kind of almost outright angry posts. Why aren't we buying longs? And a lot of them. And I encourage you, go back. All those comments are still there. And then back here, you got a little bit of excitement, some people kind of getting on board. But then this was kind of a capitulation. Again, I'm just taking, because this is the only thing that I can really base that I know is pure. The media, any media, mainstream media outlet, whether it's print or TV, can spin things the way they want it, and they will. They can control the narrative completely. And what we see here in the comment sections is real people doing real stuff. And so back here, recently on this push up, it just seemed to be that final knife in the heart for quite a few people. I mean, there were some posts, people saying that they've either given up on shorting completely, they're only going to buy longs, or they're just, giving up on the site or whatever. And that's a sign of capitulation. And so what I try to do is extrapolate that to the masses, because I think it is fitting. It's a small sampling pool. I get that. But and that's where we're at. And then the fact that, I've been talking about for gosh knows weeks, if not months, waiting for the next big sell signal. That's why I color coded these lines red, that one, and then finally that one, and we get it. And I don't know if anybody's out there shorting or taking advantage of this, or selling long, stopping out, or really doing much of anything. And so that's usually when I feel most comfortable being short, when everyone else is given up on shorting or wants to be long. Likewise, back here, I remember the January lows. I was unwaveringly bullish and long the big tech, said I'd overweight big tech, the FANGs, what's now known as the Magnificent Seven, named Amazon and Apple as my two favorites. And then, but said, go with QQQ, it should outperform the S&P, and that's when it did. And that was from the January lows, not that October low, because that's where it actually went back down and double tested, even though the S&P bottomed there. But my point is, there were very few comments, and the ones that I recall were, well, I'm not going to go long now, and we're in a downtrend, and maybe if I see this and that happen, and that was the time to go long. So bottom line is, I'm always going to be contrary, and I try to catch, and I do often catch bottoms and tops. Sometimes I catch a top or bottom, or try to, that's not there. Get a few fingers cut. That's what happens when you try to catch a falling knife, but that's what stops are for. Back in here, I thought that was initially, that was my maximum bounce target zone, was somewhere up here, and it started shorting, and those shorts didn't pan out. And we tried again up here and here and here, and so far, so good. So, and it'll be even better if 350, 470 gets taken out, And then guess what? It'll be early again if we go up here and we take out these levels. So as of now, this remains my preferred scenario. You guys know my targets. You know my thoughts. You know the levels to watch. And again, I don't know if you did it. As I was going through a lot of those videos, I said, here's the one, set alerts on these, set alerts on Bank of America and Apple, MasterCard, and set alerts on in the big tech stocks. I mean, we'll do that in another video. I got to wrap this one up. But remember, there's still, this was our breakdown in Apple. These are still that August 18th low, I think will really seal the deal for the bearish case. I think there would be a lot of stops set below that level, and you're coming up on the 200-day moving averages as well with Apple, Microsoft right here. Microsoft, see, all these guys are breaking down recently. We have additional sell signals, and so that's why I'm doing these videos, and that's why they're long-winded. Here's a blow off top I highlighted in Microsoft, then a break of that trend line, then a break of this trend line, then a back test that set up this little bearish rising wedge. The last time I highlighted Microsoft, I said the next sell signal will come on a break of that wedge. There it was, a red impulsive candle. We're stair-stepping lower. But there's that, I think, all-important August 18th low. And so if we take that out, that should open the door to more downside. Alphabet, beautiful breakdown. See, this is why today, that was yesterday, Fed. This is post-Fed day. Alphabet now has to rally all the way up here and recover that trend line. That's going to be a pretty much this thing's done. This was as I referred to it recently, a beautiful textbook bearish rising wedge pattern, complete with negative divergences. And now we have those confirming sell signals. More and more market leaders, especially the Magnificent Seven, breaking down. So it's time to be short, from a swing perspective. Forget about little 5-minute chart stuff. Tesla breaking down. Meta broke down way back here, back test. It's just been a slow roll, just like when the market topped back in, a lot of sectors back in late 2021 into early 2022. All right, guys, let me wrap it up here. I'll get the video out to you, and I'll see if I can find anything else, any other niche trade ideas for you. This has been Randy Finney with Right Side of the Chart. Have a great day.